Well, good morning, everybody. I'm Josh
And I'm Blake.
with Blue Edge Energy. Thank you for tuning in and watching this. We want to do a bit of a market recap on where things are at this fall right now as we go into the winter. And this is kind of the Ask Your Expert session right here. So,
As we've seen with a lot of commodities this year, we're just going to tell you up front. I mean, natural gas has had a near vertical growth pattern all of summer long. We've gone from gas at $3 to gas yesterday, prompt month, hit a high of $5.65. And that's for October delivery.
yeah.
So, like many commodities, natural gas has been on a rapid rise.
So let's talk about just kind of a recap of the program. What are some protections in place for people, kind of in brief again, for folks?
Well, I mean, what we've found historically is, if you want to save money versus the utility, the program actually performs better at higher prices. So it's kind of a good news, bad news. I mean, prices are higher. Your energy bills this winter are likely to be double what they were last winter, but versus the utility, you're going to save more. So that's one storyline.
Right.
Another thing is that the way we structure contracts and the way we negotiate those contracts, utilizing NYMEX and first of the month pricing, eliminates to the greatest extent possible, and I have to put that footnote in now, volatility. You're not exposed to volatility normally, so that the first of the month pricing, that's one reason it tends to perform better even at higher prices. And I'm putting that asterisk in there because of last year. Because even though we negotiate those contracts to try to minimize the exposure to volatility, if there is a force majeure event like we had last year, where massive amounts of natural gas freeze off, suppliers can invoke force majeure and invoke daily pricing. And that's what many people saw last winter.
Okay, so there's multiple things in place from the contract to basis locks and stuff like that. So let's talk about the market itself. So when we ran RFPs this spring and so forth, winter forecast was, I think, $3.25. We're sitting here today, as of this morning, just Thursday, at about $5.30 a
for
decatherm
October delivery.
For October delivery. How did we get here? Has that been a straight shot up? Has it been what does that look like and why?
Well, I mean, it's just kind of like we're on a roller coaster and we're still climbing the hill, quite frankly. I mean, you scratch your head on why it's gotten here. I mean, we had an earlier discussion on a lot of different salients, but, like with a lot of commodities, there's a lot of money out there chasing the commodities. There's a lot of demand, although the interesting thing is even though we're seeing a lot of demand, like one of our clients, I mean, they've got all kinds of orders on their books, but, they're constrained on how they can deliver because of labor and supply chain issues, which, appear to be the case in natural gas. And to back up to a discussion we had earlier, I mean, prior to COVID, to drill a shallow shale gas well, typically the cost was somewhere in the range of about $1.25. Well, even if you consider steel pipe, labor costs, which I don't think are as high because jobs in the oil and gas industry traditionally have paid very well, so I don't think the labor costs have risen. So even if you say $2, the cost of drilling and bringing a well on has gone from $1.25 to $2. I mean, we should be seeing exceedingly more drilling than we're seeing right now. So the question is, what is constraining that? Capital is cheap. Labor markets are tight, but oil and gas generally pays well. There's plenty of rigs that could be stood up. So supply chains, drill pipe, it has to be the kind of things that are affecting multiple industries.
Yeah. So we have the prices are there where people should be drilling, bringing things to market. We're just not quite seeing it right now at this point in time.
And in fact, I mean, the most recent economic data, and visiting with other analysts, is that they expect, demand to kind of slack off this winter because orders just aren't getting filled. Not to mention that the COVID-D is exacting a toll on the ability of manufacturers and the economy. So there is actually an expectation that that demand may taper off. And while drilling has not taken off to the extent we would think it has, drilling has almost doubled this year, even though it's not where we would want it to be, given these prices.
Okay.
So we expect to see, a slight dip in demand. We expect to see some growth in production. And one more item I just want to sneak in here is that because we export so much natural gas, we now export 12 BCF a day, plus we've doubled the capacity for moving gas into Mexico to 6 BCF a day. So we're exporting 20% of our natural gas, where that didn't exist a few years ago.
Yeah.
And the prices overseas in Europe are insane. There was an article this morning talking about how European consumers are already seeing incredibly high prices for it.
It's over tripled, I believe.
Yeah.
Right? Yeah. So we have gas that's becoming a global commodity. It's not new, but so much of it is being shipped overseas. It's crimping us here.
Well, the shipping into
domestically.
overseas is new to the extent we're doing it now.
Yeah. But to this volume, it's new.
Oh yeah, absolutely.
So let's shift to storage, which is so imperative, and so many people watch this, especially this time of year. Are we behind the 5-year average? Are we behind last year? How do we see this season ending right now? What do the experts tell us?
Well, yeah, we're behind. One reason we're behind is because we had a record inventory of gas at the end of last year.
Mm-hmm.
If you look at demand last year, and you were looking at LNG shipments. LNG shipments, even though we had capacity for 12 BCF a day, during the height of pandemic last year, we were only exporting 6 BCF a day.
Right.
Consequently, we got to a record level of gas in storage, which is not typical, right? So we're working against a very high number to start with.
Yep.
But since we have not seen the drilling activity we would expect to see at these prices, we have not recovered to near the averages. However, when you say that, though, today, on today's storage report, we topped 3 TCF. For the last 5 years, our average take of gas out of storage has been 2.2 BCF. So that would suggest that we have an 800 BCF cushion in an average year. Now, we are just moving into the time of year where we tend to make significant additions to storage.
Yep.
To your earlier question, EIA has projected 3.6 BCF, but that was before the hurricane kind of knocked out some production off of New Orleans. So, expectations have been 3.5 to 3.4, and just a few years ago, we entered the winter at 3.2. So it's going to be on the low side, but it's nowhere near.
We've seen it a lot lower.
We've seen it a lot lower.
And we're coming off last year, which had kind of a record storage volume going into it. And so when we look year over year, it looks bad.
That's right.
But on a 5-year average, it's not as bad.
But here's the thing. A lot of natural gas right now, just flat seems to be too much money out there. And there's an awful lot of speculation in natural gas these days, as with many commodities.
Yeah.
And consequently, even though fundamentals say that we should be fine this winter, that doesn't necessarily mean prices are going to drastically go down. Now, I would expect that, given that we're now into shirt sleeve fall weather, and we're starting to add significant volumes back into storage, the fundamentals should tamper prices and knock them back down to a certain degree. And that may depend upon how well NOAA is doing their forecasting, because NOAA's forecasting.
All right, well, hold on, because there's our third question, is whether the 800-pound gorilla, as you always say.
The 800-pound gorilla.
So tell me, what is NOAA telling us is the predictive nature over the next 3-4 months?
Well, quite frankly, we're expecting a new updated forecast anytime now. The last time that NOAA updated their seasonal projections was August 15th. So anytime now we should be seeing a new one. But they have consistently said that we're going to be across almost the entire nation warmer than normal through December.
Okay.
Now, we are seeing in the last report some indication of cooler weather in February, March timeframe.
Okay.
But again, a lot of it's going to depend on how this winter starts. If we start the winter warmer than normal, October, November, December, and gas is not pulled out of the ground, then that's going to put us in a much better position come, January, February, March.
Yeah. So we're watching NOAA. We have a delayed winter, and we're gonna see what happens over the next month or so. So one of the big plugs is tune in to our weeklies, especially over the next 4 to 6 weeks, as we kind of watch pricing and some of those key fundamental indicators of what's coming, because it's a very critical time for us here in the gas market in Wisconsin. So I guess let's summarize it like this: prices are much higher than expected. I mean, they've been on a steady incline. People are having to deal with that. People listening to this
Like
are
almost every commodity out there.
like every commodity out there has this type of inflation built in. So, as a customer right now, what would you recommend?
I think at this point you have to stand pat until we see how things course over the next couple of months. Again, if the weather forecasters are right and we stay warm, that's a good sign for prices going back down to some level.
Right.
I'm not saying we're getting to $2. I'm not even saying we're getting to $3.
Right.
But strong injections over the next couple of months, favorable weather. I'm not supposed to. Now, on the other hand,
You got to go with the science here. You got to go with the science of the weather and so forth. Don't drift off on Farmer's Almanac thing here. But so I think
does anybody go by the Farmer's Almanac?
Well, the key I think is right now is to be patient, and despite the high costs of gas as you stare at them right now, let the months, especially the next prompt month, let's see how that falls off the books. I mean, and see how that goes over the next 2 weeks.
And as always, everyone's contract is in our system. So if you want to talk, individually about where pricing is for your particular load, or any other issues, or you want to recap kind of what we talked about, give us a call.
Yeah, sounds good. Well, if you get anything else, give myself or Blake a call. Thanks for tuning in, and we'll talk to you later.